Hello and welcome to the MiniAnalyst.com's free daily market analysis for September 20th, your Thursday. We're going to look at the daily chart of the S&P 500 cash index and just a brief recap where we've been. Looks like we went officially bullish right around here. Looks like we actually went officially bullish on 1440 in the S&P with confirmation. Had a little bit of retracement here. Made a discretionary gain of roughly at its zenith at least 110 points, and looks like we had a little bit of resistance develop here at the 1540 level. A little bit of a head and shoulders set up, a higher high there, lower high here. Had a bit of a retracement and challenge of our intermediate term support, and the bulls wanted to make another run of it, as most people did. Everybody likes a market that's going up. Tried to break out of the 1440 there level, key level there. However, got a little bit of a trouble here. Did reverse, come back up, but got an ET sell signal right on the daily chart there. I hope you guys can see that. ET sell signal, again, it was high level in nature, but the fact that it was in concert with a failed breakout attempt of a key obvious horizontal support resistance level pretty much suggested that you're going to get a lot of follow through on the bearish side. We went unofficially bearish there, actually went bullish officially on a break below the key and very round, looks like 1500 level right there, when officially bearish. Rode that all the way down to what we got right here, which was a JC, a Jeff Cooper lizard tail buy setup. Had a bit of reversal. Obviously there was quick fall through there. Got back up to the intermediate term measure of support resistance of a trend following perspective. Kind of chopped around a little bit there, and fortunately for us, went back to, and hopefully for you guys as well who follow our free daily report, went back to bullish on an official basis at right around 1384, and of course that was ahead of the Fed lowering interest rates by on Tuesday by 50 basis points in both the federal funds rate target and the discount rate, which was extraordinarily bullish for the markets, and we'll take a look at some reasons why there in a second. But as you can see, obviously we've got another discretionary gain of maybe 36 points. So really been a discretionary euphoric zone over the last at least since the winter, and so we've made some nice profits, and hopefully you guys have participated and followed this report and positioned stay on the right side of the market. So where are we now? Well, we're officially bullish still. There's no reason not to be. Granted, we do have incredible resistance here, but if you have a Fed that's going to be as aggressive as the Bernanke crew, on the bullish side, then there's no reason not to be bullish. And from a price technical perspective, we're bullish. From a trend following perspective, we're fully bullish. From a momentum perspective, we actually went bullish right around here on this crossover on a short-term basis, and have recently become IT bullish as well. So we're fully bullish here, fully bullish here, fully bullish here, fully bullish here, and becoming bullish from a directional movement perspective as well, at least our short-term bullish at current. So that's where the cash market is. Hold your positions long. If you got some short-term enormous profits like we have, you might want to be taking some of those profits off the table on a discretionary basis. But all in all, we're still bullish. Looking for a move above 1540 and really on to probably 1580 in a pretty quick fashion. So I want to take a look at the biases here. September 20th looks like all blue. That means all green for the bulls. Got bullish in the both short-term and intermediate term on all three markets. Of course, the Dow's included there as well. Market feel is bullish and bullish. Again, on a short-term basis, I might be looking to take some short-term profits here. On a momentum perspective, again, as mentioned, we're bullish and bullish on both time frames. Bullish here, bullish here, bullish here. So take a quick snapshot look at the market biases, and obviously we are bullish. We're pure technicians, as you know, at the MiniAnalyst.com, but did want to take a look at, we do like to follow the economic outlook as well. And a couple of key things pop out here at this the economic reports for this week, and one was the producer price index dropping 1.4% on the 18th, which I think was Monday, so I had anticipated a drop of a dime, and no pun intended there, but got a drop of 1.4%. So that was pretty impressive, showing that inflation, at least at the producer level, is nowhere to be seen. Then we got the CPI. Of course, that was down a dime. Had anticipated a flat reading. It was actually up in the previous reading. So again, no inflation to be seen at the consumer level, and of course the Fed obviously had access to this data right before deciding that we have the all clear to lower interest rates and get this market going. Hopefully get some support for something that affects all of us, or most of us listening here, and that is the housing market. We all want to see our homes go up in value. Nothing really else to report. Got the, of course, leading economic indicators today. Minus 0.6% against previous reading of up 0.4%. So more indication that there's an all clear to be at this number right here, and even lower, hopefully going forward with a few more eases. But right now we're currently at 4.75% on the economic front. So that's the economic front and the fiscal front. So we've had some great discretionary gains in this free report, maybe 100 points there, at least on a discretionary basis, you know, at its high, maybe a little bit more. The ET sell signal was, you know, definitely take some profits, and maybe another 100 points on the downside here. Got another quick 30 to 40 points just recently here. So depending on where you're taking your profits, you know, the discretionary people, hopefully you guys are taking this advice and making some money. So where did the MiniAnalyst.com portfolios? Where are they? The systematic portfolios, the bread and butter. Where are they doing? Well, just wanted to give you a quick look at least Tuesday's performance. This is our matte black portfolio. Now this is our high-end portfolio. It's a $100,000 minimum to gain access to this portfolio. And as you can see, fortunately, it was also predominantly long, to the tune of about 80-90% long exposure, ahead of the Fed's decision to lower interest rates. So our matte black clients really participating nicely, getting a nice 18% gain, or $18,000 on Tuesday, so that's really good there. Nice little gain. But on a percentage basis, actually the Swinger DT, now it's a more aggressive portfolio, but it is does have a lower capital requirement minimum to get started. Again, it's an aggressive portfolio. The Swinger DT consists of 11 contracts and 11 lots across 11 non-correlated systems. And as you can see on Tuesday as well, it was long, as 90% of our portfolios were, and notched, looks like a 32% gain just in that day. Made $9,615 on a $30,000 portfolio. Obviously, do the math, you get a 32% gain. So very happy MiniAnalyst.com clients on that day for sure. The next day, up again, another $3,865 on a $30,000 portfolio. Nice little 13% gain. Of course, this was actually at midday yesterday. We did give some of that back, about half of that back. I think we finished up about $1,250 for the portfolio. As I'm looking at it right now, looks like we're up 1602.50, 1522.50, 1522.50. So we're up another $1,500 today. So nice little $1,200 gain yesterday. You're looking at roughly that. So a nice 40% move for our Swinger DT portfolio, and it's nice to not be giving any of it back. And again, non-correlated, non-optimized trading strategies combined to attack 4 different markets is the key to minimizing risk, and while at the same time capturing the upside. So just wanted to let you guys know about a special we have on this portfolio, the Swinger DT. Right now, if you subscribe to 3 months, and I believe it's a reduced rate of $1,200 for 3 months, you can actually get an extra 2 months free. So an awesome deal there to gain access to one of our venerable Swinger DT portfolios. So this is Kenny signing off, and hope you guys have a great trading day.